when an economy is developing, also the capital markets are developing. And I will have an interesting discussion with Kaspars on the capital markets and not least the equity markets in the Baltics. What he has done and what can be done in order to make these markets growing to improve an efficient allocation of capital and help companies to strive in the Baltics. Hi Kaspars, thank you very much for inviting me to your studio. Great to be here. Let's start off with a little bit, who are you? I mean, we can come to the professional Kaspars, but who are you as a person and what have shaped you over the years until to come here?
Yeah, my name is Kaspars, and what I do right now, I write and talk and speak about investments. And I think one thing that characterizes me is, I always say it's my parents' fault because their first education is that they're teachers. And something has rubbed off on me that I want to tell people what to do, or at least share my opinion. And this is how I've been doing for a while, talking, writing about starting out with personal finance, then investments, and trying to give some useful tips and just writing out my own research with the aim how to earn more money for myself and to help other people do that.
Where did you get the interest of finance and personal investments from the beginning? Where did that come from?
I don't exactly remember, but already in the middle school I had a feeling that I want to go into finance or economy. And right after high school I went to the it's called BA of School of Business and Finance, or Latvian Banku Augstskola. So it's people graduating that are working in banks, finance accountants, etc. So I went for finance program, and already before that I started work in Parex Bank. I used to work in a call center during nights, actually, while I was studying in this higher education bachelor's. And then I continued my ventures there. In the meantime, I tried some trading, some forex, etc. I was always interested in that. I don't know why, but maybe I wanted to get a lot of money, and it was interesting, and all these processes, how they work. And then after the bachelor's, I went for MBA here in Riga as well, and then started to work in a bank at first as analyst. Analyzing stocks and macroeconomics, and then shifting towards portfolio management. And I got my CFA, so went all this way. And at some point I started to write a blog about personal finance. I wanted to share my knowledge, what I have done so far, or some simple things where I got an idea that people are usually asking me, what is this, what is that, and how to do with pensions, how to do with savings, and what to do with loans. And I decided to share my thoughts, and that's how my first blog came about personal finance. It was actually for this financial literacy themes, savings, deposits, loans, etc. And then afterwards I shifted slowly to investments as I was doing it professionally. And then I started to bring out investments more into public. And that's been actually the journey for the last 15 years, let's say.
Yeah, no, but it's a topic that I've been very interested in myself as well, and I know where it comes from actually from me as well, because when I was a kid, well, even I think I bought my first stocks when I was maybe a year old or something like that, because I saw the receipt of the stocks, because it was my father then buying it in my name, and he was interested in the stock exchange back in the days. And there, because he thought that I mean, he was curious and interested in what happened with corporates, and then he also realized that he was an ordinary blue-collar worker at the local paper mill where I was being brought up, me and my brother. But he thought that probably good to do some savings to the boys in case they want to study, because he understood that studying that costs money and then you need to have some savings. So what can I do then? Work in the paper mill instead of buying a new car every year, which he never, well, he bought a new car once, but instead he took that money and saved it in the stock exchange, which turns out to be a quite good business. I remember, at our table in the kitchen, it was kind of pile of the Dagens Industri, the business papers, and he was borrowing from some other friends that were interesting. They were exchanging, and a lot of business weeks and those types of different, in Swedish of course, because I only spoke Swedish then, but those type of papers. So my mother was saying, can we please clean the desk? No, this is very interesting, he said. So I think that's probably where I ended up in banking, and my brother ended up in private equity. So maybe you get something from that. But I think therefore that I've seen that in Sweden we have a long tradition about this kind of investment literacy or investment interest. And this is one of your purposes with the investor clubs here. So tell a little bit about that, and where do you see that you're heading when it comes to the investment knowledge in the society here?
Yeah, by listening to your story, I understand that actually I'm such a person who is doing some kind of innovative things or going against the stream, let's say, because for let's say for my parents, when they grew up, they didn't have the opportunity to invest in stocks in the Soviet Union. Afterwards, there were of course in 90s and 2000 there were privatization, but there were so many bad experiences with that, and so all this thing for the previous generations, it's like they feel that generally there are some, of course, who made a lot of money, but generally public feels that they've been cheated or bad experience, or it wasn't the right place to be, and so it's all in the past. And so I had a feeling that nobody is doing that here, and somehow I was thinking that maybe I should go there. But yes, what we're doing with the investoruklubs is we're trying to bring more practical and useful information to people. I don't like the name retail investors, especially sometimes they try to translate it in Latvian as unprofessional investors, and it gives to me some kind of connotation that they are maybe not so good. But actually, what I've seen from a lot of individual investors who are actively taking care of their money, this is how I call them, very good results. They're doing completely different things that are doing banks or professional asset managers. They're picking their own stocks by their own values and by their own analysis, and they're doing very good. A lot of them have very good returns, even last year when most of the markets were in minus. So we are trying to bring more information about investments, which is useful for a normal person. And when I tell how we differentiate, I tell it to our readers, my colleagues, the editorial staff, and I tell it to our partners or advertisers that how we differ is that we write and publish information that's useful for individual investor. We won't write information about company that is not public in stock exchange, because we cannot do anything with that. So if Madara Cosmetics, which is one of the companies in the Riga stock exchange, Nasdaq Baltics, then if they say something, we write about them because we can buy sell or sell the shares. If some other company, some mill or some wood cutting company is publishing something that and they're not in stock exchange, it's no interest to us because we cannot do anything with that. Also, we don't write, maybe I'm telling about a lot of things that we're not doing, but I think it's very important to single out that we're not doing things that others are doing, which I think are more oriented towards interesting but not useful for me as an individual investor. When I look at my own portfolio, I know my limits where I can invest. I can invest in, let's say, public stock exchange because I can buy a few shares or a few hundreds of shares. I can maybe buy in some peer-to-peer platforms. I can buy some bonds if they are, let's say, the minimum subscriptions are a few hundreds euros or a few thousands of euros. So these are available for a normal, typical, average investor who has some money saved from their main activities where they make this money. And so we concentrate on this. So we also don't write about some big private equity deals or some real estate, because again, me as an individual investor, I cannot do anything with that. And so this is the one thing where I try to concentrate our content. It's not easy. I think we are again going against the stream, let's say, of overall like general media, and it's not good, not bad. It's just the way it is. I think that in general, media concentrates on what's interesting, and let's say, with a louder headline, and then getting the people to pay their attention towards that. But we at Investoruklubs, our main income source is subscription fees from our subscribers, and I try to concentrate the content toward what's useful. So they are willing to pay for what's useful. Actually, we see it from our reader statistics. Interesting articles are read much less than those who are useful. So,
what type of targets do you have? What key performance indicators? When do you know if you're successful or not? How do you measure that?
Yeah, well, I would say as a business, we will see if we are successful or not when we reach the targets of, let's say, for the business of break even, right? And that depends on the number of subscribers, and then there's of course a lot of variables, how large we staff that and get others. But I think we have been very successful so far. We have been growing very fast, even comparing to our protege is Investor Thomas in Estonia, where they have been doing very great with the Investor Thomas conference and investment festival. And this year in their investment festival is a 3-day event with more than 1,500 people attending, and they are paying for that themselves. This isn't a B2B event; it's B2C. Private investors are paying a few hundreds of euros to go there for 3 days to listen, learn, talk, and network, and do everything about investments. And but they also started small. They started with 50, 60 people attending these events, and by those numbers, we are growing faster. I don't know if we will go there. This 1,000 or 1,500 in a few years. I would be very happy if that happens, but. So far, we have been growing very fast, starting with our larger events with more than 100 people, and the last one was more than 200.
So you almost sound a little bit like a Lithuanian here. If I beat the Estonians, then I'm really, really happy if I'm faster than them, right?
Well, I think in Latvia we have this always. This Estonians are ahead of us in everything. But right now, I would say they're ahead of us in our field in absolute numbers, but the growth, we have faster growth right now because we're starting from a lower base. But yes, to sum up, I think what we're trying to do is bring useful content to individual investors.
Can you give a tangible example, something that has really worked very well when it comes to usable content, something that is not interesting but adds value to the reader? Yeah,
what we do company analysis. We do it on our own. We write for a fictional character, investor Sandris. This is real money invested in financial markets, but me and my colleagues, we are making decisions for that, and we're trying with this example to show how to do things, what we are thinking, and we're not giving investment advice. That's
because you're not allowed to do that, right?
And we're not trying to do that. We're just, we don't want to do it. We are just writing analysis, and our readers can decide them for themselves whether how they use it. But also, what we do, for example, when there's new IPO coming in Latvia or even Estonia, Lithuania, most of the people know that they already, if you want to reach retail investors, I use my own word retail, but let's say this group of investors. Then you should come to us, and we create special events for that. We can arrange for the CEO to come on podcast and have a talk and find out more about the company. We ask local investors and professional investors about these companies, what they think, are they worthy to invest or not. And in the end, our subscribers get a lot of content that helps them make this decision whether they should participate, for example, in IPO or not. They make the end decision, but there's a lot more information, because otherwise you get mostly only press releases or company announcements or their webinars. But we try to bring also these opportunities for people to come to our events, where we invite CEOs of the companies. They come and give presentations. For example, in our last event, it coincided with the period where you can subscribe for Storant Holdings bonds. This company renting out building construction equipment, and we had CFO in the event. So she gave a presentation, and so these visitors of the event, they can actually go and speak to the CFO. And I always tell people, can you imagine something like that happening in the US or some larger markets? can you talk with okay, these are like Mark Zuckerberg or Elon Musk or someone like that. But in Latvia, or in Baltics in general, we get to speak with these CEOs and CFOs of the companies. And of course, just by talking and asking a question, we are not making a big change in company direction. But each of our this interaction with them, it does impact in some way when you ask this question, when you tell them, I think maybe this is not the right way to do it. They won't change in your direction or by your suggestions, but I think it nudges a bit. And the more active we are, then we can actually influence how things are happening.
Is it easy to get those companies, some of them are quite large, to join into your investor festival? I mean, do you have to convince them?
Maybe I'm just lucky, but for me, yes.
Okay.
But, and also we have quite small markets, and lately they have been working a lot more towards their investor relations. I think it has been also an evolving process for them as well. Previously, they were in stock market and stock exchange just to get the money, but then they understood that, okay, it depends. For example, stock options. If you have stock options, then your remuneration is dependent from the stock price, right? All let's say all investors who own this company, they are interested that the stock price is higher. For that, you need more new investors. So you have to work on these investor relations. You have to have that in the budget. So they are more actively participating in events. It's quite easy, I would say, to get them. Of course, they always evaluate how this event will be valuable for them as well. And but I think we have proven that we are the right place for them to come and talk. And yeah, we had recently. A few months ago, we had special events here in Riga with the Ignitis Group CEO. So they're the largest energy company in Baltics.
Yeah.
And I think if we can do that, then it's we can do almost everything here in Latvia.
Have you managed to get any outside Baltics, if not companies, but speakers into these events as well?
We haven't tried. It hasn't been our goal yet. But I don't miss an opportunity when I have a chance, for example, to have someone on let's say, for podcast. If they come to Latvia, for example, I had a talk with Ole Hansen from Saxo. He's the commodities guys, and he's really, I would say, almost a guru in this space, right? And it was a great honor to get him here, and I don't miss those opportunities if I have them. But I think when we grow larger, these events for us, and we have larger budgets, then definitely some international speakers will be on the to-do list.
And how has the investment side been doing? How has investor Anders, how has he performed? And is he a happy investor since he started, or?
Yeah, if we talk about last year, then he was quite happy because he had a very small. I think he was even a bit of plus last year. This year he isn't doing so good. Okay. General markets are very good and rising very fast, but he has, let's say, I would say, value investments or mostly investments in local Baltics and Latvian companies, and they haven't been performing so well. So this year he's a few percentage points in minus, but since he has started 1.5 year ago, I think now it's minus 3%, something like that. So it's nothing bad. The target is to reach to 10 to 12% per year in a long term. He has 30-year time horizon. Okay. And of course, now it seems like a very long term. But if we look at our, let's say, cousin or uncle, investor Thomas in Estonia, then he has only 9 years left to this project because they started in the beginning of 2000s, and time is running by very fast.
So they are kind of both saving for the pension, or?
Yeah. To have a better life in the end. And we started with 25,000 euros. And if we get to this 12% per annum rate of return, then the end amount would be almost 750,000 euros. That's significant help in retirement.
That's absolutely, yeah. Do you see that investors have different purposes with their savings?
Yes, I think they have very different purposes, and I think the overall this investment literacy, let's say, or even financial literacy is still on quite low level here in Latvia. And in many cases, I have to tell people that are you really investing this money for a long term? And in many cases, it's just, no, I want to park it somewhere for 1 year because then I will buy a land plot, then I will build a house or something like that. So, okay, then investment is not the right place to be. This is the long-term thing, and people are still finding out these basics. And of course, now when interest rates are higher, there are a lot more options. You can do something for 1 year, for a few years, and get I would say, even decent returns there. So it isn't so bad, or there are options, let's say. This is the good thing. Previously, when there were zero rates, then of course you want to do something, but then you're mixing up this investment time horizon, which is it's the duration of investment is not matching your your needs, right? And but yes, they're doing it for different purposes. Some are trying to do like income generation, but I think or passive income. But I would say there are almost no actually passive investments. In either case, you make some decisions at some point, and what I would say our main target audience is the ones who are coming up. They have some money, what they have earned in a job, what they do very well, or in their business. I think one of the hardest spots to be is when you have some 10, 20, 50, even 100,000 euros, because you're too small for a bank. In a bank, you get a package deal, I would say usually, or some pre-packaged, let's say, services. To get something individual, you need several hundreds of thousands of euros, let's say portfolio management or some special solution or some private banking services. You need a higher level of money. But when you have some 20 or 50, and this is the first money you get in life in such an amount, you know that you've done something very good, right? You have earned it. Then you find out what to do with it. And this is, I think, the hardest spot to be in, and I think for those people we are bringing the most value with this content, with stock analysis, with interviews, podcasts, and bringing useful information, what to do with this money.
Are you also going into advising on funds, or is it always a stock by stock or bond by bond basis?
What we're doing is we are covering local stocks in Baltics, and here the idea is also that we cannot get anywhere else information about, let's say, Latvian stocks or even Baltic stocks in some global media. We can read about Apple, Facebook, etc. We can read about it everywhere. But this is our, let's say, competitive advantage, that we can write and cover these. There's still quite large language barrier. People like to read in Latvian, so we cover a bit of also these local global markets. But about funds, we are not covering funds in a way that we're covering funds, but we're talking about global markets in a sense that, let's say, S&P 500 index, what's doing that, and then we let's say have talks in our events also about passive investing, or how to select ETFs, and that's all somewhere in there. And for example, in Investor Sandris' portfolio, we also have 2 ETFs positions there, so we have that as well.
One of my concerns when I've seen statistics from colleagues working on the pension side in SEB is the risk that very many pensioners will be very poor when it's time to start to live on your pension in all the 3 Baltic countries, right? And of course, it's pensions. On top of that, we have the size of the pensions. We have a high inflation as well that is kind of diluting the value of this. And on top of that, the amount of savings and what you actually will earn at the end of the day. And therefore, I thought it was very interesting to tag back to what you said about that you should do investment with a long-term horizon. Totally agree with that one. I mean, this doing short-term trading, that's a pretty different business, and it's need to be in a little bit different market and so long-term savings, do that one. Do you see this problem as well, and what shall we do about it?
Yes, I see, and I think that of course I could sing this popular song that we should improve our financial literacy, and I agree to that. But I think we're also realistically in a very tough spot where it's quite hard to have some, let's say, decent savings from even average salary in Latvia, and it's a challenge. Of course, I hope that people with the changing the generations, when the will start to save more and maybe be more active, because also there's not a thing about lack of savings, because as of this moment when we're recording this talk, I think the latest statistics is that we have 10 billion euros of household euros sitting in the banks.
I know.
Yeah, and this is very worrying for me, that people are not actively looking for opportunities, or they are scared, and they are not using this opportunity to grow this money in time with the compound interest. But I don't have one recipe or one big solution how to solve that. I think at least what I'm trying to do is person by person or reader by reader bring on new opportunities, bring in these events, and talk with them, and try to talk in I think one of the hardest things is to talk about investment in a language that people can understand, not to use too many investment terms or jargon. It's very hard to do that, but if you're talking from this high place or with these very specific terms, you don't get any attention at all. So it has to be mixed in all kinds of ways. But I totally agree. There's a problem. Our ambitious target is that we should be able to grow our, let's say, active investors even 5 or 10-fold in the next 10 years. Then we will reach to, let's say, some Estonian level, as we're always looking after Estonians, right? But then probably we could be on that level, and I think everyone would be a beneficiary in that sense, because people would earn more money, the stock market would be more active, there will be more opportunities, more companies in stock markets, and it's also allows to earn money the owners of the companies or the largest shareholders, to managers, and everyone earns more money, right? By being more active, and people with their savings also are earning more. But I hope it changes in the longer term, but I'm realist, and I think that for those who are not saving today, I will pay with my taxes in 20-30 years. So I think that's also part of the truth. So I have to be even more with my own money, trying to earn more than I earning right now, trying to get higher interest, of course managing risk, but again doing more for myself, and yeah, I think that is the way how to go forward, but be also very realistic about it.
I think that the average Baltic private individual investor or not, but is actually taking too little risk in their private balance sheet, if you put it like that. And as you say, and especially this goes for Latvia and Lithuania, because if you look on the amount of deposit that we have in the banks, it's way more than what we are lending to corporates and to private individuals. And in Estonia, it's a very good balance in that market on average among banks. But so, and Latvia and Lithuania also in a European context sticks out in this way. And where maybe some people feel or they see safety because this is deposit insured and the banks are big and so on and so on. I just get nervous because I see that this is money that is actually losing value with the type of inflation you have out in the society for every day.
But maybe I can add a bit more. One comment to that is that we know from investment psychology that losses hurt more than you are happy when you are winning, or let's say earning money or having some profit. And if you look back at the past, then 2008-9 was very tough in Latvia. A lot of people lost money in real estate, wherever, right? So they are afraid of that. They had this very bad experience previously. So that's why I think also this lending market has been quite slow comparing to other places, especially in Latvia. And one more thing is that we have all this bad experience or not good experience from these companies from 90s or early 2000s who went to the stock market through the process of privatization. In that sense, we have some good examples. For example, Estonia. We have this Merko Ehitus, which were listed in stock market in 90s, or Tallinna Kaubamaja Group, and here the father or grandfather or mother or grandmother, he or she can tell her child or grandchild that, what are you doing with your money? Start to invest it. You can earn your money. The Merko Ehitus is paying €1 dividend per annum, and that's almost as safe. But you see this and you can talk about it. But here we don't talk about that, because most of my parents and grandparents had a very bad experience, and this is also takes generations to change it. So I think it's a very slow process.
But it might also be that if you should save those, if you have those 10 or 20,000 that we talked about, maybe one should not invest 100% of it just in some Latvian companies.
Yeah, sure.
You should probably spread it, right? So you have I don't know, Nordic companies, some international companies, maybe a fund to get kind of a risk spread of that one. Because what I heard, actually, it was last week on Swedish news, I heard some comments about now interest rates are going up and so on, alternatives for investors. And then also these comments, I think it was from a journalist, and and stock market is always risky because you can lose everything. And I was thinking, how can you actually say that? Because technically, yes, I agree to that one technically, but if I invested in the Swedish stock exchange and it would go down to 0 kronor, everything is gone. It means that all big companies I know in Sweden have went belly up, right? And then I think we as a country have a much, much bigger problem than just that I lost my share investment. So the market moves and it can go up and can go down, but if you're kind of long term, I mean, that's my thinking. You know what Rockefeller said, the big US investor, I never sell. Kind of that's but you never realize the losses then. But of course, sometimes you need to sell because you should do something with the money as well. But so I think that there is a work to be done when it comes to on risk taking.
Yeah, as well, people should be more active with their money. And I think it's also in some kind of in Latvian nature, I would say, on average. Of course, it's not for everyone, but on average, I think we are quite conservative, or we want to avoid a lot of risks. We have to be, in general, more risk-taking, both in investments, business, careers, everything, right? So I think, but also I think it's just how it is. We can try to work on that, but I think it's also shows it in the markets, in savings, in everything. It just reflects the people's feelings and traditions, I would say.
I've been thinking about this. One thing that can increase the interest among investors, that's of course if there are companies that I know of that are listed. So if I'm a driver of a Volvo car or a potential, I'm interested in cars, and then I realize I can buy Volvo stocks with the Volvo car stock was listed on the stock exchange quite recently, and then I can invest in that one. That makes it maybe the step to do that is shorter, instead of some company with an acronym that I don't know what they do because they're in a total B2B business, which I can't maybe relate to. I think, could this be a limiting factor in the Baltics as well?
Definitely. I think in that sense, Estonians again are very ahead of us, both of us Latvians and Lithuanians. Lithuanians, I would say, are one step ahead of Latvia, and until few years ago, we had only a few companies on the main list in Baltics, so there's not much companies that people can relate to. But the situation has been changing in the last few years, and again, Estonians are taking the lead with bringing in the market their Tallinn port and Enefit Green. Tallink is very big on the stock exchange, and Ignitis Group a few years ago coming to the stock exchange in Vilnius. And I think this will is setting a good example. Our government has also stated in their policies, and they're talking about it publicly in Latvian Central Bank conference, that this is one of their goals, to bring some of the government companies to stock exchange. And if we look at the experience of Estonians, bringing one large government company brings into investment world some 10 or even more thousand people who haven't done it before. Just because this is a company they know, they trust it, and they know that government will look after it. And And I hope that this step will also be taken in Latvia. I'm not sure that it will happen this year, maybe next year. If, also, how the government is, if it's stable enough to do that, because it's actually a political choice. That's nothing else, just a political choice. If they have, say, even enough willing power to do that, or they feel that they have enough political capital to do that. But when it happens, then I think it will be like a very huge kick forward or leap forward with this our investment culture. Because if you have one investment already in your or one stock in your portfolio, then you start to look for other options. You have made the first step. You have overcome this opening securities account, or we have these investment accounts where you have preferable tax solution. You have opened that, you have made the first deal, you know, or you already have something in your account, then you maybe see some regular dividends and you start thinking, okay, why should I limit to this? And that's how it all, I think, starts. And but that will really help. That will really help. We are having new companies coming into the markets in the last few years. There was 2 companies on the main list and 1 company on this alternative list. This year, some few I think are coming on the market. Some retail names. Thinking about the names that are in the retail space. Like had this fuel station operator coming to stock market a few years ago. This year, egg producer is coming to the market, and most of the people know they're produced from
understandable
stores.
product. Yeah.
Yes. This is also very important, because if you bring something, let's say, not I wouldn't say not real, right? But you bring some high tech something company, then you have to have a specific investor for that. For masses, it could be very challenging to understand what it really is.
I used to work back in the days, 10 years in corporate finance, doing listings on the stock exchange, IPOs, and also doing M&A, both public and private. Public meaning you're making offers for listed companies then. And one thing that strikes me when I look on very many of the listed companies here in the Baltics is actually that it's the free float is very small in relation to the market cap. So it's kind of what I mean with that is it's just a minority of the shares that you actually can trade in. The rest is sitting, and I see that also from state companies. We want to keep the clear majority of the shares in. We want to have control of this one, but we can list a smaller part of it. And of course, as an investor, I mean, it will never become a bid, most likely, on that company, right? If you have a more freely traded company, then it might be someone buy it and you get kind of a 20-30% just tick up because there is a bidder that wants to acquire your company. And there can be other kind of more, the market can move more freely, if I put it like that. I mean, what to do about that? Because I see that especially state want to both, as we say in Swedish, both have the cake, eat the cake and have it still, kind of. They want to have the control and still do these things.
Here I would say it's thing about public opinion, and people have so bad experience with privatization before. They're very afraid that big large government companies will be privatized again, and there will be some new oligarchs who will take it over, or maybe not even local oligarchs, but let's say previously there would be a Russian investor coming in and buying it over, or Swedish or German, whatever, but there's one big guy coming in and buying anything, and then while it's working, it's all good, but then they are being pressed and they cannot do anything about that. So I think this is a thing in Baltics with government companies, and I don't think this will change in the next 5, 10, 20, even maybe years. This still will be fear of privatization, that you don't want to lose control of this active and this is public interest. But with the private companies, yes, I agree. There's still quite low float. I would also like to see a bit higher, or even a bit, or significantly higher level of free float being there. But again, from the other side, I think it's a very interesting investment thesis to invest in a company where mostly all of it depends on success story of these founders or their active managers. So you actually can join in their success story. They need this money for the development of, or let's say for the next growth phase, but you're actually joining them in on their success. And if you see that they are good managers, good let's say, they're working with capital responsibly. And I think it's a very interesting type of investing. I've seen some investors who are investing only in this philosophy. They want to invest only where the company is owned by the single or few, mainly few investors or families, and then you join them in for their success. And you, as an investor, you have a choice. You can join or not. That's also one thing that I'm sometimes a bit of wary when I see all this happy or merry round going, like, yeah, we have to support companies and invest in IPOs and etc. And I always tell, well, first of all, people want to earn money, right?
Is it a good deal?
Yes, is it a good deal?
Is it priced okay?
Yes, yes, because we want to earn money, right? I'm not going to participate in IPO just to support someone, right?
No.
And sometimes I think we are being pushed in a way that we should support, there should be more activity in stock exchange, but that's not the purpose. The purpose is to earn money, right? Yeah, but
some 10 years ago, then no, it was even maybe more. When I was in my previous job in SEB, then I met the Warsaw Stock Exchange, and they were back those at least kind of pitching quite hard on Baltic companies, because they say we have much better liquidity. Come to Warsaw and we will fix the listing, and there is a lot of investors and so on and so on. So I think, and this about liquidity, it's kind of the key thing here, to have liquidity in the market. Also, that if you're a professional investor, you know that you can get out of a larger portion of the stocks, and the market can swallow it. And I think as it is now very much in the Baltic markets, you have to sell it out in small portions over time to have that working. So it's a little bit the chicken and the egg issue here, and I don't really have a good solution unless you can find some, I don't know. What do you think about this idea? You can just come up with it now.
I wanted to use the same example, chicken and egg.
Yeah.
There's not enough companies to invest. There's not enough liquidity, so there's no new money coming in, and there's no new money there's no new liquidity because there's no new money coming in. But I think we're going towards the step by step. I think the liquidity has increased in Estonia.
But sorry, is it right to have? I know it's kind of all a part of Nasdaq, but is it smart to have 3 national stock exchanges? Should we have a Baltic list as a part of the Stockholm or Helsinki stock exchange? Would that be a smarter way to attract liquidity and so on, or is it getting too far away? Just a wild thought.
Maybe, but then again, I think there's the question: do we know these companies, or do we actually get more interest from, let's say, Swedish investors if they're listed here on their stock exchange? I don't know. That's just an open question, if we get more interest or not. Right now, we have all 3 Baltic stock exchanges. They're actually united. They have one main list. We have this alternative list and secondary list for I would say older style companies who have been there historically. So Baltics are joined already. If something else would help, I don't know. Maybe that's an idea to discuss about. But then I think we also risk in a way to take it away from Baltics, and people start to distrust it or don't want to go there because it's not local enough.
Do you see that for a Latvian investor, it's clearly for the, I was about to say the man on the street, or the retail investor, or with this regulatory language, this MiFID language, the non-professional, is it much easier for a Latvian investor to invest in a Latvian company compared to a Lithuanian or a Swedish one? Or
technically it's the same.
Not technically, but mentally, I meant.
Mentally, definitely.
Okay.
Definitely, because here again, you have the feeling of how the company is operating. You see their logos somewhere. This is this home bias, as always, stock markets, right? That Americans have all of their money in your American stocks, and I think we are close to that. Just the difference in Europe is, I think, in general, is that Europeans have some investments in their local markets and then something in the US, right? Because you have, these large global companies. But otherwise, I think it's very, very local. I know that exemption was Enefit Green case because it was very understandable, very simple, straightforward. Green energy, state-owned company, majority state-owned company. So it's a very straightforward deal. So you can understand what's happening there. if you have some private companies and it's maybe already becoming too complicated for individual investor. I'm not talking about more advanced investors, not professionals, but individual investors that are more advanced. They go everywhere where they want to go with their money. But for masses, I think yes, locally listed stocks are the way to go. I wouldn't say that's the correct way, but they are definitely, because less language barrier, you get the information in Latvian. You can also get access to their, let's say, even events or go just home bias in general. I would say.
Another idea then.
Yeah.
Well, think about this one. In Sweden, we have the state-controlled AP funds. That's our kind of the general pension that everyone has. So they invest that one simply into stocks, into bonds, and into real estate. And over the years, it's been accumulating a lot of money. I think that, I don't know for how long they have been there, but for many, many years. And I think that as they have been pushing in a lot of money in the stock exchange, when it comes to doing an IPO, or when it comes to in general raising new money in existing companies, they're always there because it's a big important investors, almost like the Norwegian state oil fund for the global stock market. And I think this has been helping us to develop the market. So if it was some years ago, I saw that in statistics, I mean, Stockholm was number 2 or 3 stock exchange in terms of new companies being listed, activity, and so on and so on. And I think this has also taken down the barrier for a lot of Swedes. That it's if the state is investing in stocks or using our pension money for that one, probably it's not kind of too wild then, and we can trust the system and so on.
Yeah,
something to think about here. You need to do it the long term, but.
Yeah, they are doing some steps. They have some IPO and pre-IPO funds coming from European money, so they would support companies who are they want to have a listing later on or having listing right now. For pension plans, again, usually it's a liquidity question. I have heard from one pension manager, he said even about investment in Ignitis Group, which is the largest energy company in Baltic stock markets. And they said that when they make these kinds of investments, they make investment in a stock with an idea holding to maturity.
Holding to maturity?
Of course, doesn't make sense because you hold to maturity a bond, right?
Yeah.
But for them, if they take a position for a few tens of millions of euros, they know they cannot get out. The only option is either the government buys out or some large global players buy this company, but they actually see that there's no realistic solution that they will get out of it. So this again is this liquidity question. How do we? But I think it will take just a long time and step by step steps. And we have got rid of all the crazy speculation that was here in 2008-9. I think we have pretty good. Attractively valued opportunities of investments right now. So our stocks, I think in many cases, are valued very attractively compared to global peers because there's no less correlation with global markets, right? If the global markets are being sold off, here usually it shouldn't be actually sold off because there's not the same money is invested there. And I think with time it should even out. At least I hope so. At least I hope so.
When I analyze companies or discuss about companies, I think that the sustainability angle is very important. But you that are looking at, I maybe look at from the risk side. Yeah. You're looking more from and not talking professionally, but when you look at more from your kind of the investment side, how do you see sustainability? Is that something that it has a boost affecting valuation, or how do you?
I think, with sustainability, I have this feeling for a long time that it's more coming from the top and not so, let's say, institutions, regulators, everyone is pushing it onto everyone to do it and to think about it. And there's not enough demand from individual investors. We use some products, some pension plans where we cannot do anything. It's there. So we don't even have to worry about it. Either it's there or not. But for private investments, I think this is one of the ways how you can express your values, if it's important for you or not. And I think in many cases, it's a lot of greenwashing. A lot of companies are using sustainability for just their marketing slogans. And the question is how much they're actually doing. But then I have one very good example. And again, this company called Madara Cosmetics, and you can feel in everything what they're doing. They have this in the way how they operate, how they talk. You can feel that they are operating in a truest sense of sustainability, that you are not only caring about environment, but you have good operational structure, you take care of your people, and here you can actually feel it. When others are talking about sustainability, I feel in some cases they are just using these words because they want to use it, or they know that they get, or at least they think they get some points for using them. And in some other cases, I'm a bit worried that we're, in some larger sense, we're a bit delusional, especially when we talk about some investments where we cut something out. For example, investment in oil or stuff like or commodities, right? And then here, my biggest problem is that if we want to have this green energy revolution or have more renewable energy, we need to spend this energy right now. And we cannot get this energy if we don't spend money in for oil and commodities and mining, etc. And when I see some products from some places where they say that they exclude everything like oil, mining, and that, and I'm, how do we get there? You're just saying that. I think this is also the same case with the electric cars. I'm not a denier. I draw one here today because we have these benefits in the city. You can park for free and just mathematically it's beneficial. But to have this benefit for the nature of CO2 calculations, you have to drive it for more than 100,000 or 50 or depends of calculations kilometers to even out the CO2 footprint, right? So in the beginning we spend more now and then we get back later. But maybe I'm getting into many details, but I think this is also like for many normal investors, these things don't go together and they're a bit confused.
You need to be able to put it in the Excel file, right?
Yeah, and they're a bit of confused. Why are you pushing it too much, this thing to me? And then we have a speaker in our event who's talking about ESG, and then he tells that yes, we have different understandings of what it means, but now there's coming new regulation from Europe. But then there's again different standards, and then you will have to do this and do that and this. And I'm already imagining for a company, if you're a listed company, you have to, I think right now you have to have at least one person full-time who is just dealing with ESG reports.
Reports. At least.
Yeah. But yeah. So it's, and I'm not saying about the way how you do the business, but just for the report, right? Yeah. So I'm not, let's say, a total skeptic. I'm not this, let's say, a gas guzzler who just goes for the pollution of our environment. I want to live in a greener world, but I think it has to make sense, and we have to be about realistic and not only going after slogans.
I think probably it need to be that the company in itself need to see that, I mean, how will this improve my business? Yeah. How can I increase my competitiveness if I go in that direction? And by that I can get a better margin, or I can grow my market quicker, growing my sales. And then because that is something that is tangible, you can calculate on, right? Yeah. And I think this is a little bit the problem with quite many companies which are touching on. It's more kind of, we need to fulfill these regulations. It's European Union has come up with something, but we don't really see how does it create the value for us. And here I see a big difference. Some companies start to think in this way, but when I see on Nordic and actually Nordic investors, I had an example the other day. It was EQT, the big private equity fund, Swedish one of the big in the world actually. That there is an example. They have been investing in an American company that are running school buses. Why is that? You know, the yellow buses, school bus in the US. Why they had 30,000-40,000 of them, or where it was. Why is that interesting? Because they see that what they will do now, they will electrify these buses. And when they maybe have electrified some 30% of that one, then they can sell the company at a quite different multiple, because it's a new modern company with a sustainable and all that, and that will be value enhancing. So I think, and this is, I have not heard anyone in the Baltics reasoning in this way, that kind of, if I do that, then actually I can probably increase the valuation of my company and so on, that much and so on. So I think that, and of course then it's impossible for an investor if you're just in a local market to to have a feeling for that one.
I think this is also one great opportunity for Latvia, as this could also unite very many goals that we could reach. For example, bringing in the stock market, we have a company who is planning to develop this renewable energy. Let's say similar company to what is Enefit Green in Estonia, just the same one in Latvia. This is the most straightforward. You can attach high multiple. People will understand it. You can get a lot of money for it, and people can get into good investment where it's actually quite understandable and easily straightforward business with the profit margin planned in, and so all of the goals could be reached with the same way going forward. Yeah. But I think one more thing I wanted to add is that I've heard in one conference, one bond investor, he told that sustainability in itself, not the standard or reporting or that, but sustainability in itself should be a standard for everyone. It should be as a way how you do the business. You're thinking about how you can do business normally today, so you can do it normally in the future and take care of everyone. It should be a standard. And so for him is that if a company hasn't been doing some, let's say, if they suddenly start to use in all of their reports, in their marketing, how sustainable they are, how they are using, or how they're using these ESG scores, that's a red flag for him. It should have been a standard or a way of life before. This is just an add-on layer how to measure things or that, but it should be in the way how we think about it, not the way how we use it for marketing.
I think that you're doing a great job. And it's not only me. I know that the Latvian Bank Association like what you're doing, and also Nasdaq is liking what you're doing. So continue to do that and educate investors so that people understand that they don't lose out long term on their savings. Thanks a lot for good work, and thanks for the discussion.
Thanks.
Thank you.